Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Thursday, January 8th, and this is your London Open Prep. Markets are risk-averse to start the day, with Asia mostly lower and Europe set to open softer. While oil slips, gold gives back ground, and tech supply chains face a fresh wrinkle as Nvidia tightens terms on China sales. Overnight, Wall Street broke a 3-day winning streak, and Asia followed with declines led by Japan and Hong Kong. Headlines tied to U.S. politics rattled defense shares. An oil slide added to the cautious tone. European equities are indicated lower as geopolitical nerves linger, including renewed chatter around Greenland and broader U.S.-China tensions. For traders, that matters to sentiment, even if the direct market impact remains contained for now. On technology and policy, Nvidia is reported to be demanding full upfront payments from Chinese clients for its advanced H200 artificial intelligence chips. With no cancellations or refunds allowed, the move reflects uncertainty around Beijing's approvals and domestic content requirements, and it underscores a mismatch between strong demand, orders reportedly in the millions, and far tighter supply. In the region, China's central bank kept liquidity abundant with large reverse repo operations, while South Korea flagged it may step in if currency swings become disorderly. Turning to central banks and currencies, the Bank of Japan left its regional assessments unchanged, describing most areas as recovering or picking up moderately. Still, the yen is caught between safe haven bids and questions around the pace of policy normalization, especially after weak real wages and softer demand for long-dated Japanese government bonds. In Australia, a sharply narrower trade surplus and a firm message from the Reserve Bank of Australia, pushing back on near-term rate cut hopes, saw the Australian dollar edge lower, but not unravel. Meanwhile, the US dollar found some support after a stronger services index reading, with the dollar holding gains against the Swiss franc ahead of Swiss inflation data and the US jobs report. Commodities are softer. Oil's pullback is weighing on the Canadian dollar as traders reassess demand, and gold is slipping for a second day as investors lock in profits into the U.S. jobs numbers. India prices are lower too, a sign of the broader consolidation in bullion. Market and sector focus, this setup favors a slightly stronger dollar and a defensive equity tone into the European Open. The yen may stay choppy as safe haven flows meet Bank of Japan uncertainty, while oil weakness keeps pressure on energy-linked currencies. Tech sentiment could be mixed, with Nvidia's China stance highlighting supply tightness but also regulatory friction. Looking ahead, the calendar pivots to data. Swiss consumer prices and, more importantly, the U.S. jobs report later this week are the key macro catalysts. In the UK, Christmas trading updates from Marks & Spencer, Tesco, and Greggs will help gauge the health of the high street after reports of the strongest December footfall in years. Worth watching for broader consumer signals. What I'll be watching today, the Australian dollar against the US dollar, where a gentle downtrend can persist if the Reserve Bank's hawkish tone outweighs softer trade data. The euro against the Canadian dollar, looking for an uptrend to hold if oil stays under pressure. The US dollar versus the Swiss franc, with a firm bias if Swiss inflation is subdued and the U.S. jobs backdrop remains solid. The euro against sterling, steady to slightly firmer if investors continue to look past softer euro area inflation. And gold, where a drift lower into the U.S. jobs report would fit the current profit-taking mood. The takeaway, markets are cautious rather than stressed, balancing softer commodities, firm U.S. services data, and unresolved policy and geopolitical threads. Optimism is there, but it's measured. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.